The oil price boom is not just a hit for India's external balances. Corporate India has lots of worry about as well, with Brent touching the $81 per barrel mark. Companies that use oil in the form of fuel or raw material will see costs rise. What's worse, even explorers who stand to gain from higher realizations can't breathe easy if the rally continues. Soumeet Sarkar is standing by to tell us why. Soumeet, good morning.
Good morning, Neeraj. So if you see, generally oil producers tend to benefit with rising crude prices, but in India that's not the case. For ONGC and Oil India, which is the largest oil producers in India, now they tend to lose if crude surges beyond a certain limit. Now that is because they might have to share the subsidy with the government. Now for FY19, if you see, crude prices are expected to be around 30% higher, but the petroleum subsidy estimated by the government is hardly unchanged compared to last year. And because of this, ONGC in its annual report also mentioned that if the crude surges beyond a certain limit and if remains at an elevated level, they might have to share the subsidy burden with the government in financial year 2019. Now, this shortfall in subsidy burden increases the earnings risk for these upstream companies. Now for downstream companies, if you see with daily and free pricing, the impact of higher crude prices are generally passed on to consumers. At least that is what we have been seeing for the last few days. But during election season, this is not the case, because if you see in the past two election seasons that had happened right now, that was the Gujarat election and during the Karnataka elections, the marketing margins of these oil marketing companies had dipped severely, and that was because of no pass through of this higher crude prices, and that could impact the marketing business of the oil marketing companies. Now so far we haven't seen that impact in the second quarter, but if you see over the next 8 months, there are 9 state elections and 1 general election. Now this could keep the marketing segment of the oil marketing companies under pressure if crude remains at a high level or keeps surging beyond the $80 or $81 per barrel mark going forward.
Okay, but what about the sectors which are dependent on crude prices?
So I'll start off with the aviation sector. Now for them it's about 1/3 of their total cost, that is the fuel cost, and given the current ticket pricing scenario in the aviation industry, their margins will be impacted because of higher crude prices. Now in Q1 the fuel cost per seat kilometer was on an average 30% higher and at its 3-year high, and this rise in fuel cost coupled with the ticket pricing environment had severely impacted the profitability of the airline companies, and this is expected to continue in the ongoing quarter because there has been no change in the ticket pricing environment and the fuel prices have also remained higher for the airline companies. Now the second sector will be the lubricant manufacturer, that is Castrol India and Gulf Oil India. Now crude is the main input material for them, and usually they pass on this by taking price hike, but it comes with a lag. Now in the first quarter we had seen the gross margins take a hit compared to last year because of higher crude prices. Post that they did take a price hike, but given the recent surge in crude prices, the margins, that is the gross margins, could remain under pressure in the ongoing quarter also. Now comes the paint companies. Now for them it's 50% of their total cost is crude cost, and in the past we have seen that with rising crude they have usually passed on this to the consumers and there's no lag, so most of the impact they should pass on to the consumers, but we'll have to see how that pans out for them in the second quarter. Now tire companies, now they use synthetic rubber and carbon black. Now these are crude derivatives and not directly related to crude, so the price hike comes with a lag, and tire companies also pass on this hike similar to the paint companies to the consumers, so there won't be much impact, but we'll have to see whether they pass on this price to the consumers or not. Also plastic manufacturers, now they use variety of plastic polymers. Now they are also crude derivatives, but rise in crude prices will increase the prices of this polymer components and could impact the margins of the plastic manufacturers like Neel Kamal, we have Supreme Industries, so these companies will be in focus because of the rising crude prices. Now one sector that tends to benefit because of this rising crude prices is the construction sector. Now companies like L&T, KEC and NCC, now they have a significant exposure to Middle East, and in past we have seen whenever crude is on an uptrend, construction activities in these countries pick up, and so they tend to benefit from that. Now L&T is the biggest beneficiary here because 26% of their order book is from Middle East and 69% of their international business is from Middle East. So L&T will be one company that will be in focus because of this rising crude prices.
Okay, so if the orders come in, they could benefit, but yes, from a pure sensitivity analysis, Soumeet, just very quick 30 seconds, which is the space, which is the company that is likely to get impacted negatively the most if crude were to stay higher?
Most it will be the aviation companies.
The aviation companies. Yes. Okay, well, already under pressure.
Yeah.
Let's see how much more they can take.
In fact, HSBC came out with a note and they are also deferring the Q2 preview because they cannot say what would be the numbers because of this current pricing scenario and the cost scenario that we have seen in the aviation industry.
Well, we like flying cheap, but it's having a toll on the aviation companies for sure. Soumeet, thanks for putting that into perspective.